Hey traders, how's it going? Nick here from Vant Trading coming at you with another quick and informative technical analysis tool video. Today I'm going to be covering a different thing. It's not a study, it's not an indicator, it's more of an equation or formula, and this is the average true range, or ATR as most traders will refer to it as. So again, the point of this video is just going to be informational purposes, kind of learning what is an ATR, how does it work, and why do a lot of traders actually look at it, and maybe a little bit of how you could possibly use ATR in your trading. If this video is helpful at all, be sure to like and subscribe to our YouTube and drop a comment below. Now, what is the ATR? So average true range is essentially what is the average high to low of the day that a stock will do. So a stock is trading throughout the day from 9:30 to 4 o'clock Eastern, obviously. What is the average amount of range between that day's high and that day's low over the last 14 days, 15 days, 30 days, whatever? It varies per user, per platform, per formula. So what this is telling you is, on average, what is that kind of range that a stock will trade in? For example, I have pulled it up on Thinkorswim here. It is this line at the bottom. In the SPY right now, on the last 20 days, the average ATR for the SPY is 4.08, which means on average over the last 20 days, the high minus the low of the SPY was just over $4 a share. That means that from the high to low, peak to trough, is $4. Okay, simple enough. Why is that important? Why would you want to know that? Well, before you enter a trade, an investment, whatever, you need to have the right expectations. What if you enter a stock like Ford, for example? Ford has a 38-cent ATR. What if you buy Ford as a day trade and you're like, I want to make 50 cents, a dollar out of this? Does that really seem like a realistic expectation to you? Probably not, because over the last 20 days on average, it's only moved peak to trough 38 cents. And that's not, just a certain move. That's literally the entire range of the day. So if you have the wrong expectations about a stock based on how much you think that stock can move, it could absolutely ruin your trade before it even begins. And you would have the wrong risk to reward. So that's one reason that ATR is very important. What exactly is the formula for ATR? Where did it come from? Brief little history lesson. It was first introduced by market technician J. Wells Wilder Jr. in his book, New Concepts in Technical Trading Systems. And the formula I will pop up on the screen briefly now. It's one of many formulas you can find out there. There are all sorts of different formulas, but this is one based on the Wilder method. It's going to show up now. Pause it if you want to see it longer. Now, what are some ways that you should use ATR? You could use ATR. First of all, if you're lucky, if you have a trading platform that has its own little level 2 or order window, if you're lucky, you should check the level 1 of your platform, because a lot of times you can customize that with actual information. The high, the low, the open, the close. Sometimes a trading platform may already have an ATR that you can have show up on the screen. That would be really, really helpful. If you don't, pull up another charting system like Thinkorswim and just know what the ATR of a stock is, because then you can get a sense of how far can this trade move. Now, there is an important caveat I want to mention. An important news event day, a day where something's going crazy. There's outsized volume. There's a whole lot of traders in this stock. Maybe it's had earnings, it's had a breaking news play, whatever, and this stock is moving. In that case, you can absolutely expect a stock to move multiples of its ATR. What is an example of that? Let's give you a couple. First of all, AMD. AMD today, and it just so happens I'm filming this as earnings season is starting to pick up. AMD's ATR is just over $3 a share. Today, it has a high minus a low, high of 89 and a low of 80, about 4. It moved almost twice its ATR. Why is that? It had earnings. It gapped up. It has a big spike in volume. There's more traders pushing this stock. So it was more realistic. If you were short bias, you could have been looking for a little bit more. Now, it's obviously important also to know the ATRs from the high minus the low. If you were buying a stock and you're about 50 cents off of the low, keep that in mind, because it's not 50. That ATR is not going to be from where you entered. It's on average from the high and the low. So know where you're entering relative to the current day's high and low. That can also be important. So it's going to be very important in that way. What are some other examples of stocks that have moved multiples of their ATR? Visa. Look at Visa on this day. The Visa average is about $5 a share. Look at us on this day right here. We went 206 to about 220. 14. That's almost 3 times the ATR. Why did it do this? Turns out it has, I believe, a DOJ investigation coming out against it. Big, big headline. big spike in volume. That's going to be two of your biggest catalysts there that are going to drive that ATR up. So you could have expected multiples of that ATR and you would have gotten it. What are some other examples? Disca, they had some headlines, obviously, many multiples of their ATR. Crocs, whatever. Crocs had earnings, moved multiples of its ATR. Snap had earnings, it moved multiples of its ATR back here from high to low. And then also some examples of just some, the meme stocks, the runners. You can't really take ATR into consideration because on average, prior here, this stock didn't move. And now it's being manipulated, low float pushed, whatever, and the volume's obviously up and exponential. So you can't really take ATR into consideration there. Now, what are some ways to use it? Well, you could be using ATR as an example of your sizing, of your price target when you enter a trade, or just a general sense of, well, when should I be looking to exit? Those are some of the many ways a stock should be entering. I know many traders that will not enter a stock if the ATR does not meet a certain criteria. If they're a day trader and they want to trade a more volatile stock, they will not trade a stock that has an ATR less than $1 a share, or 50 cents, or $5, depending on what kind of trader you are. That's going to be something that's important to keep in mind. Obviously, with many of these platforms, you can right-click onto them, go into the studies, and change this ATR. How many days back is it looking, or periods back is it looking? What kind of average are we talking about? Are we just talking about the simple average between the high and the low over the last 20 days? What about a weighted? All different kinds that you can find out there and customize what they look like. Some platforms like Thinkorswim will also give you the minute bar ATR. If you're a scalper, if you're a day trader, whatever, that can actually be really helpful. So if I wanted to trade, say, AMD today, and I wanted to make that trade in the middle of the day, what's the minute bar average we're seeing? About 20 cents. So if I'm just trying to scalp for the next minute or two, now I have a reasonable expectation of what I might expect. This is one of the many ways you can use ATR. It's why ATR can be really important and really helpful. It is by no means a method of deciding on a trade or deciding when to take a trade, but it's more of a curtailing of expectations before you enter a trade. What I'm trying to say here is that, ATR is going to be a very important indicator for many of you. It's going to help you decide on whether the stock is even in play for you, what kind of stock that is going to be, how far it can move, and what kind of profit expectations you may have. That's really all ATR is. It can be really helpful if you can have it just in a small corner of the screen. If it has to take up a big portion, I'll leave it up to you whether you use it. Regardless, it's a great piece of information that you can have on your charts. This was Nick from Vant Trading. I appreciate you for tuning in. I'll see you next time, and as always, safe trading.